But over and above anything, that we've got the assurance that the UK government and local councils are feeding that inflow of capital in order to cover the coupon, which puts us in very, very good stead.
Hello, you're watching Proactive. I'm joined by Glenn King. He's Managing Director of Oakmount Partners. Glenn, very good to speak with you. It's been a while since we last spoke, so great to get an update on developments at Oakmount and listed bond in the pipeline. Tell us more.
Absolutely, yes, Stephen. Good to see you again. So we're now sort of at the real advanced stage, if you will, in relation to the launch of our listed bond and the instrument itself. Notably, from our last meeting, we were talking about a value of 350 million, which was priced out in US dollars. We've actually enhanced that, so we've come across to our native currency, that being GBP. So we've increased the bond value, or size rather, to 500 million GBP, which is earmarked solely for social housing, care homes, and really sort of plugging the gap that is forever widening here in the UK. There's a lot of people clearly in great need of social housing and care homes, of course, and there's a lot of distress in the market. So we've got a really good opportunity now with those funds raised to be able to capitalize on the opportunity in the broader market. But most notably, all of our income from that side of the portfolio effectively comes from the UK government, inclusive of subsidies. So it really underpins the coupon paid to clients. And although the coupon, the static coupon, if you will, the static rate is quite low at a 6% yield, we also do provide a degree of the profit share as well. So that gives us a return over and above the static yield, which puts bondholders, at least, and the IFAs, wealth managers and other that we work with, in really good stead to be able to hold a portfolio with a strong yield and one that is sustainable.
Glenn, apart from the opportunity you're seeing for those funds, what was the demand like?
Oh, the demand has been incredible. I mean, we are literally, and this is no word of exaggeration, we are getting thrown opportunities pretty much on a daily basis. Literally, we have no time to review all of them. I mean, we've got our partners within the core mix, or the ecosystem, if you will, of the bonds, and we're not looking at going beyond that at this stage. But of course, this is our first listed bond, and it's an instrument that is pulling in 500 million. And now those funds will come in on a global scale. Of that, I have no doubt. But I think most notably, we're able to then move into other sectors of the market, and we can create a secondary bond later down the line. But our absolute priority as we near year end is finalising the last bits of compliance and audit sign off. Just an example would be that all of the back end information surrounding the maths that go into the bond, as you can imagine, it's intense. But our forensic accountants are dealing with all of that. So we're very close to launch now.
Mm-hmm. And you talked about government support there. Can you remind us about that government support, Glenn?
Yes, we work with the local councils up and down the country. We've got, with one of our JV partners, they've got more than sort of 1,400 care homes approximately under their management presently. What we're going to do is be able to provide the funding to go in and acquire and buy these properties, because effectively at present they're leased. So we will own the bricks and mortar. We will carry the inflated rate as it increases over the years ahead. It's a 10-year bond fixed at 6%, and again with the added coupon, but the added profit from profit share. But over and above anything, that we've got the assurance that the UK government and local councils are feeding that inflow of capital in order to cover the coupon, which puts us in very, very good stead.
Glenn, can you remind us about your four-pronged property strategy?
Yes, of course. So our property approach really boils down to these four core elements. So we've got park homes as part of our property structure and property portfolio. We've got social housing and care homes. And then, of course, we've got development. So we build homes. We have been building homes for a number of years now, usually within the home counties of Essex, Cambridge and other. But these are more sort of luxury 3 to 5 bedroom homes. But outside of that, just last year, we moved into the Dubai market, only with villas. We don't touch apartments because there's an oversupply, but we do refurbish villas out there. So that's been a very, very strong side of the portfolio. We've done incredibly well with that. So essentially, it just comes down to park homes, static living, if you will, the development of new properties, social housing, and care homes. That's really the four-pronged approach, which is sort of it's the key parts of our ecosystem for property.
So you've talked about the strong appetite you're seeing from the debt markets. How about equity markets, Glenn? We've chatted previously about Oakmount's listing plans. Are they still on track?
Everything's still on track. As you can imagine, there's an immense amount of compliance and oversight that goes into these things. The key thing for us, of course, which this £500 million bond is part of, it's essentially building up our AUM. So we've got certainly over the next 5 years, we want to get the company to to a minimum of 100 million in valuation, and then we would look to advance that significantly thereafter. But the milestone is 100 million presently. We're very confident that we can do that, and then of course we can start looking at the listing over the course of the next 18 to 24 months. In fairness, so it takes time to get there. But yes, that is very much the goal, to move to being a public company and then listing.
But I hope you'll continue to keep us updated on your progress. Thank you very much for speaking with us today.
Pleasure as always. Thanks, Stephen.
Glenn King, Managing Director of Oakmount Partners.